For a moment, imagine this. You bought a coin. The number on your screen turns green, 20% up. Excitement. Then the next day, red, then more red. And suddenly, that money you called an investment becomes just a number slowly moving towards zero. Welcome to crypto, where people become millionaires and get completely wiped out at the same time. And the most dangerous part? Both stories look exactly the same in the beginning. Today, crypto is not just a trend, it's a system. A system people either blindly trust or completely ignore. But both extremes are risky. Because understanding crypto isn't hard. Misunderstanding it is easy. And that's where losses happen. Let's start simple. What is crypto? In plain terms, crypto is a digital asset. It's not cash, not gold, not a company share. It's just an entry on a digital ledger. This ledger is called a blockchain. Don't overcomplicate it. Think of it like a notebook, where every transaction is written down. Who sent it? Who received it? How much? The only difference, this notebook isn't held by one person. It's copied across thousands of computers, and every new entry updates everywhere. That's why it's almost impossible to tamper with. Now here's the twist. Normally, when you send money through a bank, there's a middleman, control, authority. With crypto, there's no one in between. No bank, no middleman, just code. And that's why people call it the future of money. But this is also where the biggest illusion begins. Because the system might be secure, your decisions are not. So, how do people actually make money in crypto? Two main ways. First, price increase. You buy a coin at 100, demand rises, more people start buying, price goes to 200, you sell. Profit. Simple. Second, speculation. Here, people don't invest based on value. They invest based on expectation. This coin is the future. This project is the next big thing. And when enough people believe that, the price goes up. Whether there's real value or not, here's the uncomfortable truth. A large part of crypto runs on belief. Not earnings, not cash flow, not fundamentals like stocks. Just demand. And demand is never stable. Let's look at the timeline. 2009, Bitcoin launches. Almost no interest. 2017, first major boom. People get rich overnight. Then crash. 2021, massive hype. Celebrities, influencers, ads everywhere. Then another crash. Same pattern. Hype, greed, peak, fear, collapse, repeat. So if the pattern is so clear, why do people still enter? Simple answer. FOMO. Fear of missing out. When you see someone turn 10,000 into 1 million, you don't think logically, you react emotionally. And markets run on emotion. Now let's talk about risk. Is crypto safe? The system, relatively safe. The market, extremely volatile. The user, the weakest link. Risk number one, volatility. Prices can move 20-30% in a day. Rare in stock markets, normal here. Risk number two, scams, fake coins, rug pulls, Ponzi schemes disguised as projects. And because regulation is weak, recovery is almost impossible. Risk number three, loss of access. Forget your password, lose your wallet, no customer support. Your money, gone forever. And the most underrated risk, overconfidence. I've figured it out. That's usually where losses begin. Now the contrast. What does hype say? Crypto brings financial freedom. What does reality say? Crypto is a high-risk speculative asset. The difference is subtle. The impact is massive. So what does a safe introduction actually mean? Simple. Enter, but with a survival mindset. Rule 1. Never invest money you can't afford to lose. There's no such thing as safe returns in crypto. Rule 2. Understand before you invest. If you can't explain what a coin does, you probably shouldn't own it. Rule 3. Stay away from hype. When everyone says buy now, it's usually late. Rule 4. Diversify. Going all in is gambling. Rule 5. Don't compromise on security, wallets, passwords, access. One mistake can mean zero. Now zoom out. Bigger picture. Crypto isn't just about money. It's an experiment in trust. Can systems run without central authority? Can code replace institutions? The answer isn't clear yet. Some say it's the future. Some say it's a bubble. The truth is probably somewhere in between. And here's the most important question. If crypto disappeared tomorrow, would you still be financially stable? If the answer is no, you're not investing, you're depending. In the end, crypto is an opportunity, not a guarantee, a tool, not a shortcut. And the most dangerous thing, it makes you feel in control when you're actually just a small part of a system. So what's the next step? Enter or wait? Maybe that's not the right question. The real question is, will you enter with understanding or just with hope? And here's something subtle people don't notice. Crypto doesn't just test your money. It tests your psychology, patience, discipline, and most importantly, doubt. When the market goes up, you feel like a genius. When it falls, you think the system is broken. In both cases, the system isn't the problem. Your decisions are. Two people buy the same coin, same price, same time. One sells at plus 30%, takes profit. The other waits, it'll go higher. Then the market reverses, profit disappears, turns into loss. Then hope, then denial, then exit. With loss, same coin, same market, different result. Why? Not timing. Behavior. In crypto, everyone is playing the same game, but with different rules. For some, it's investing. For others, trading. For some, gambling. The real problem? Most people don't even know which game they're playing. Another uncomfortable mechanism. Liquidity. Markets only work as long as there are buyers. When buyers disappear, prices fall. And when everyone wants to exit at once, there is no exit. Or only at very low prices. So what does that mean? Profit is only real when you sell. That green number on your screen? Just potential, not a guarantee. Here's the irony. When you sell, someone else is buying. When you buy, someone else is selling. Every transaction has someone on the other side, more confident than you, or more desperate. So who's right? Short term, anyone. Long term, only the disciplined survive. Governments can't fully control crypto, but they can't ignore it either. So regulation is coming. Taxes. Restrictions. Monitoring. As the system matures, freedom may decrease. Stability may increase. But here's the twist. If crypto becomes fully regulated, does it remain what people came for? How real is decentralization then? And if regulation doesn't come, how much do scams and volatility grow? Both sides are imperfect, and you are in the middle. Now the final layer. Time. Crypto feels fast, quick gains, instant losses, but real wealth still takes time. The difference? Mistakes get punished faster here. So when you enter crypto, you're not just buying an asset, you're entering a system with high speed, high noise, low clarity. The most honest conclusion? Crypto is neither completely safe nor completely dangerous. It amplifies who you are. If you're disciplined, opportunities. If you're impulsive, losses. Final question. If the market crashes 50% tomorrow, will you panic or follow your plan? Because the real test in crypto isn't profit, it's reaction. And most people fail there. Silently. Then comes the phase no one talks about. Silence, no hype, no headlines, no next big coin, just a sideways market. Boring. And this is where most people leave. Not because of loss, but because of boredom. Crypto feels exciting only in extremes. Very high or very low. But the middle decides who survives. And during this phase, builders are building, developers are working, real projects are growing quietly. But since price isn't moving, people assume nothing is happening. What you see is not the full story. Information is everywhere. Twitter, YouTube, Telegram, Discord. The problem isn't lack of information. The problem is everything looks equally valid. An expert and a random influencer sound the same. And when you can't tell the difference, you start guessing. And guessing is not investing. That's where skepticism matters. Question everything. Doubt every promise. The moment you hear guaranteed return, think exit. Because in this market, the only guarantee is uncertainty. Then comes leverage, a tool that multiplies profits and losses. Fast, brutally fast. For beginners, it's not a shortcut, it's a trap. Traditional finance versus crypto. Traditional is slow, regulated, relatively predictable. Crypto is fast, open, unpredictable. One protects you, the other gives you freedom. Both have a cost. Protection limits upside, freedom increases risk. So what's the choice? Stay safe or explore? Maybe it's not binary. Maybe the smarter approach is small exposure, controlled risk, clear plan, zero illusion. Because in the end, crypto can make you rich, or confuse you, empower you, or exploit you. And the most dangerous thing isn't losing money, it's believing you've fully understood the system when you've only seen a small part of it. So if you start today, remember one rule. Don't try to beat the market. First, try to understand it. Because winners here aren't the ones who take the most risk. They're the ones who know when to take it and when not to. And the next time you see a coin suddenly going up, pause for a second and ask yourself, do I understand this, or am I just chasing it? Because that one moment might decide whether you're using crypto or crypto is using you.